Where were they just a few months ago, Tether? At the Beaver Creek Mining Summit, talking to the actual miners. They're buying miners and they're buying a shitload of gold. And they will continue to do so anytime money moves. Not only will it be synthetic demand for the treasury, keeping rates low, it'll be synthetic demand for the gold market, letting the price rise. And then at some magic moment, maybe it's July 4th, 2026, I don't know, when Judy said he will back the back end of the bond market to gold. We've talked about this before. Maybe they do revalue it to a much, much higher level.
Maneco 64, home of alternative economics and contrarian views. Well, today I have the pleasure of speaking with my good friend Andy Schectman, president of Miles Franklin. Welcome back, Andy, to the channel.
Mario, I just have one question. When are you coming to visit me and play some more golf like you did last year? You know, where all my friends are asking, where's Mario? Where's Mario?
Well, it surely is tempting because today is like 32 degrees Fahrenheit or 0 centigrade, so it's not really golf
Listen,
here.
just pack your bags, slip out the door. Rudy and your wife it'll be a day or two before they figure it out.
Yeah, that's right. Anyway, hopefully it's a bit warmer there and you've been playing a bit more than I have. But
I think it's safe to say yes on both accounts.
yeah, Andy, I read something on Substack from, I don't know if you've heard of Silver Academy,
I
and
have.
they wrote a really interesting article. I think it was yesterday. It says December 31st, Silver's final checkout, the one night you can gift yourself life-changing wealth. I'll summarize it. We don't have to go through the whole thing, but basically, they're saying the LBMA and all the ETFs for silver, they have until the end of the year to kind of square the books to show that they have enough inventory for all their promises. I'd never heard of this deadline for the LBMA. Maybe it's always been there, but it's always been pretty automatic because there hasn't been any problem in terms of supply with the physical. So just wanted to hear from you, who's a bullion dealer who knows what's going on in the physical silver and gold market, what you think.
Well, I think, a lot of the things you see online have truth in them. A lot have a little bit of supposition or maybe overblown in some respects. I don't think that January 1 the system blows up. But you can look and see, let's just suspend retail for a moment and talk about, the US, of course, making silver a critical mineral. The Chinese government made silver a supervised commodity. What that means is every ounce that leaves China has to get permitted through Beijing. Look, the European Union made silver a critical mineral 2 years ago. The world has growing concerns, if you will. Governments around the world have growing concerns about the availability of silver. And I think, honestly, that these countries, these nations will make efforts to not only reduce exports, which feed the market, such as London and the COMEX, and by contrast or by extension, rather, the ETFs. I think that when you talk about could this happen, could we see that moment? Yeah, why not? I don't think it's imminent, but I think that there is a possibility. You look at India; their silver imports are up 500% year over year. One of the things that's most interesting is the sustained backwardation in silver. And I think that gets to what these people are talking about, because since early October, the silver futures curve has flipped into sustained backwardation. And it's not normal. It's unusual to see that in silver, period. And it's one of the clearest signs of I guess you could say, physical scarcity. Along with multiple attempts to restore contango, where the futures price is higher than the spot price. But I guess we could just simply say, look, spot silver demand now exceeds future supply. The metal is genuinely scarce. That's not just theory. And there's no question that paper selling has and can and always has suppressed price, but it can't suppress the structure of the market. And I think that's where things get interesting. To me, the most condemning thing for the silver market, at least and supporting what they're saying, is that we've got about 7 or 8 days until the December gold and silver contracts go into delivery. And you can argue this is where paper meets physical or the rubber meets the road. When you see silver 25 cents in backwardation, meaning the price is 25 cents, as it was yesterday, higher than the futures price. And as the futures price, as you know, and the spot prices get closer to that expiration, they meet, right? What it's saying is, and it's unusual to see in backwardation 7 days before these contracts come off the board or post. Someone wants physical now, not later. And with inventories tight, immediate demand is outpacing expected supply. This doesn't happen right before the expiration, unless arguably there's a big move in store for us. I would think with people really trying pushing hard to get silver in their hand before this happens. So yeah, I mean, I don't know that there's a imminent collapse January 1, but you can see that there are things that are unusual and could certainly continue to put stress. And then you add the countries like China who are going to stop the ready flow, at least it looks that way, of silver exports. And in the U.S. making it a critical mineral, President Trump can do the same thing. No more exports, just like that. I think we're getting into that cycle or that reality that physical demand is worth more than the paper underneath it. Who knows? Maybe they'll be right. But I don't like to go out on a limb and say January 1 things change.
Yeah, and you also heard most probably that India from April next year, they're going to allow people and companies, businesses to use silver as collateral for loans. And what I've seen, Andy, like at the tail end of this last summer, the Saudi Monetary Authority, their central bank, they bought loads of SLV. And I know SLV is an ETF, but being a big financial institution like that, they will be able to take delivery. And I think India has pushed a lot of these Middle Eastern countries, BRICS countries, or Gulf Cooperation countries into going into silver. And I'm hearing from some good sources that central banks now are not just buying gold hand over fist, they're starting to buy silver. And I think that's a game changer because up until recently, Andy, everyone said, well, silver is underperforming gold because it's not really a monetary metal. Central banks not interested. But I think that's changing. Have you heard anything about that too?
Yeah, well, the one thing that I saw about the India thing, unless I read it wrong, it's only up to 500 grams or 10 kilos, 500 grams in coins, 10 kilos, period. So I don't know how substantial that is. If a kilo is 32.15 ounces, so you're talking, $15,000 or so in collateral. Okay, that's cool. It's a start in the right direction. I don't know what it truly signals. And you're right. The central banks are buying. I wish Saudi Arabia would have bought it in a different form. Of course, buying it in SLV allows them to take possession at that level, which is interesting too. SLV has been the center of a lot of talk lately, with their borrowing rates being as high as 20% over the last couple of weeks, and not many shares to borrow. Interesting in that they had quite a few non-deliveries, although it's not a default. It's just the custodians who they weren't able to get shares or get silver timely enough, so it's kind of like a strike against them. But you can these conditions only appear when metal is getting hard to source. All of the things we've talked about, not to mention over 50 million ounces have already been drained from the CME warehouses this year. And when you look in your backyard in London, the OTC market, it's so tight that forward rates have flipped negative and lease rates have exploded. Lease rates a couple of weeks ago were what? They went up 200%. Again, these signals only flash when the market is stressed. Um, I would argue, look, all of the things you said are true. Um, Technically, silver is very strong because it's refusing to break its structure. Higher lows, solid support, not many sellers. So yeah, you could argue this time it is kind of different now that the central banks are buying aggressively, not just Saudi Arabia, India, Russia, adding it to their strategic stockpile. We've talked lots about China flying around Central and South America, buying doré and concentrate from Peru, from Mexico. You have the industrial demand surging, batteries and solar and EVs and nuclear and military, and the delivery requests keep rising, and spreads and borrowing costs are flashing stress. Yeah, everyone can see it now, and I would say that the powerful players, the most powerful players in the world, are and have already been making their move. And to your point early on about the retail, yeah, the retail is always the last one to figure it out. Because once the mainstream does figure it out, I think it's too late in the standpoint supply disappears. There's not a lot of supply. And you can see that really in the US Mint production or the US Mint premium numbers. A little bit of demand pushes the price up. Where's that demand coming from? I think it's very interesting in a world where Wall Street's never acquiesced to anything that you and I talk about until all of a sudden the chief investment officer of Morgan Stanley says, that 60-40 platform we've used, 60 stock, 40 bond, it's now 60-20-20. Sell half your bonds, put 20% in gold. Or Michael Hartnett, the chief head analyst for Bank of America, says, no, make it 25% in gold. Or Jeffrey Gundlach, the bond king, says, oh, that 25% is not overweight. You can see that things are happening beneath the surface at the highest level. And if just a little bit of these people, they're talking to the institutional level. I have a very good friend who runs $3 billion for Morgan Stanley. You wouldn't know a gold coin if it fell on his foot. He's in the top 100 money managers in the United States for Morgan Stanley. He doesn't know gold, yet their chief analyst or their chief investment officer says, put 20% of your assets in gold. They're speaking to the institutional traders. And if just a few percent of those traders start to dabble in the retail market, it's going to have profound effects on premium and on availability. It's happening at the highest level in the exchanges, not only in COMEX and the LBMA, but in Shanghai now too, where they're getting close to shutting off the spigot because their stockpiles are so low. All of this comes to the same point, and that is that what starts out as a trot or a crawl, and then to a walk and a trot into the accumulating of physical assets by the big money. It hasn't turned into a sprint yet, but you can sense that it's accelerating globally. And now the countries are becoming open about it, classifying these things critical, seeing the imports into the countries, seeing the takeoff from the exchanges, seeing the commercial banks and their analysts and investment advisors at the highest level acquiesce to, yeah, maybe you should have 20 or 25% of your money in metal. These things are all, this time is different. So nothing surprises me at this stage of the game, including the statements that you talked about earlier about January 1, something happening. Maybe, maybe not. Who knows? But I think this is all the reason why you don't look at gold and silver as an investment. You look at it as shelter from what's coming, because the big money has already realized that and has already made a move and is in the process of continuing to make moves. That's not supposition, that's reality.
Yeah, we're speaking here on Thursday, November 20th, and we just had the jobs data. They came out Thursday. Usually they come out on a Friday, but we've had the government shutdown, and they came out like 119,000, the non-farm payroll. It was expected around 50, and the previous number actually, Andy, was revised from up 22,000 to like -4. So net net, it was positive, but the unemployment rate rose to like a multi-year high, 4.4%, which is still really low. And then yesterday we had the Nvidia results. So the markets and the sentiment are very positive, the stock markets. And it feels to me that the main strategy now for the US economy is to pump everything into AI and hope that the productivity gains in the next few years will help write down all the debt, uh, take the pressure off inflation and the cost of living. But if you look back 35 years, they were saying that about the internet, that it would make everything people more productive, and it would dampen pressure on inflation. But here we are 35 years later, and it hasn't really helped. So my question is, Andy, do you think, even though AI is a good tool, that the markets are getting ahead of themselves?
I think that if we haven't learned by now to not trust the ridiculous nonsense, the BS that comes out of the BLS. I mean, I think it's like, fool me once, shame on you. Fool me 60 times, shame on me. Every single time they come out with numbers, it seems over the last several years, they go back 2 months later and revise them negative. The markets react, gold sells off, the stock market goes higher. It's a bunch of horse crap. And I think that we can't trust anything, whether it be unemployment or inflation coming out of the BLS. You'd be better off going to John Williams of Shadow Stats and see what is really happening. And sure, AI may make and will make the world more productive. At the same time, it's going to come at the expense of millions and millions of jobs. At the same time, the United States now has a record 18.6 trillion in household debt. That's up over 60% in the last decade. Auto delinquencies at their highest level in 15 years. Subprime auto delinquencies at their highest level in 31 years. Student loan debt, their highest delinquencies, all-time high, by the way, of 14 point something percent. Credit card delinquencies at their all-time highs. And, the economy is not strong. There is a massive disconnect between Wall Street and Main Street. And it's interesting when you talk about from the what could possibly go wrong category, not only do you have all of the insiders who have been selling quietly, from Buffett to Bezos to Zuckerberg to Jamie Dimon to Warren Buffett, $500 million in cash. They're all moving that way, as the public, retail, mom and pop, all in equities, highest level ever. All in margin debt, highest level ever. All in option exposure, highest level ever. What could possibly go wrong as you have the public all in equities on margin and on speculation, as the insiders are moving the other way? At the same time, who the hell is taking possession of all this metal in the United States? No one talks about it. Nobody but us. Where is it? Who's buying it? Who's got the money to buy billions and billions and billions and billions? That ain't John Q. Public. What could possibly go wrong as the public is over here and the insiders are going the other way, and the public wouldn't know a gold coin if it fell on their foot, along with my buddy who runs Morgan Stanley, $3 billion. But the insiders do, because they're taking massive, massive, massive deliveries. And I think when you see less than 10 stocks holding up a market, it's ridiculous. And look at all the people bailing out of NVIDIA, including their board members who are dumping shares. 3 or 4 of the biggest board members have sold a tremendous amount over the last couple of months. And I think the scariest part of all of this, Mario, that people aren't talking about is what's happening in the repo market. Because to me, something deep and troubling is happening beneath the surface. And I'd like to just mention, because you talk about, the economy and the stock market. Look, over a 5-day stretch over the past couple of weeks, the Federal Reserve injected $125 billion into the repo market, right? And we are always told that is to ease funding stress. Like in '08, when Lehman Brothers fell, it was a liquidity crisis. It led to the great financial crisis. In 2019, the repo market problem, it was a liquidity problem. They needed more liquidity, right? More money into the system. Think of the repo market as the plumbing of the financial system. For those out there who don't know, I'm not talking to you because I know you know what it is, but it's where banks lend to each other literally overnight. And they do this to keep everything flowing. And normally they will use either mortgage-backed securities or treasuries. But there aren't enough treasuries out there. They're mostly using mortgage-backed securities right now, which are in big trouble. So normally this market is very quiet, and that means everything's working. You never hear about it. But when the Fed steps in with 125 billion in cash, keep in mind that in a period of weak or a little bit of elevated stress, you might see 5 billion put in, and moderate stress, 10 or 15 billion. 125 billion is crisis level intervention like 2008 or 2019. It's the equivalent of turning on your water on any faucet in your house and hearing thumping noises in the walls every time you do so. But what makes this concerning is that this is not a liquidity problem like we saw in 2019 or 2008. It is not an out of money problem. It is I don't trust you problem. The banks have double the liquidity they did in 2019. There is more than enough liquidity in the system, twice the reserves, enabled to do this. And the Fed rarely, if ever, comes in to inject money into the overnight repo market when reserves are this high. In this environment, repo injection should be at or near zero. This isn't about money, it's about trust. And I think the banks are looking at each other, Mario, and saying, no. Not even for one night am I going to trust you or your collateral, because I don't think you'll be able to pay me back tomorrow morning. And no one's talking about that. So when you talk about backwardation in the silver market, that's about trust. I don't trust the big banks that they're going to give me my metal, or the exchanges. When you see this, these are the banks saying, I don't trust the regional banks, I don't trust the hedge funds, and I don't trust their collateral. When you look at the world de-dollarizing, they're saying, we don't trust the United States or their treasury market. You see a common theme here? When the world is based upon trust, the way that it is, we are seeing fractured trust across the gamut. And I think it's important for people to understand that what gold is and what silver is an item that doesn't require trust. It's an asset that has no counterparty risk. And I think that's why you're seeing so much of big money taking physical possession, because it's an asset that does not require someone else's, a counterparty to perform. And when you see it in the banks at the highest level overnight in what is the most liquid conservative market on the planet, when you see it in the LBMA, when you see it on the COMEX, when you see it globally, the United States and the West have broken trust with much of the world, and now even within their own ecosystem. It's a very dangerous thing. And I think people get excited about the holidays and relaxing, and I don't want to be Debbie Downer, but I will say, to me, that's more concerning than anything I see. And the only person I've seen talk about it at all is Nomi Prince. Now, I don't know how much you've talked about it. I can't watch everything all the time. I try to catch your stuff. But Nomi wrote a good piece about it, and she's spot on. You talk about the Japanese carry trade. You can talk about, political nonsense, the terror. You talk about all of it. To me, that's more scary than anything. When the biggest, most well-informed traders on the planet don't trust each other, that speaks volumes to me. And that's probably why we're not hearing about it on the mainstream. You got to dig to find it. To me, that's concerning. I don't know how you feel.
Yeah, I've noticed it as well, Andy, over the last few weeks, and I have spoken about it, and it reminds me of 2019. And like you said, it's not about liquidity; it's about banks not trusting each other for overnight, which is like amazing, and that's why the Fed has had to step in. And you spoke about all the gold that actually started coming into the U.S. after the election, even before
Yeah,
President Trump
November.
took over.
Yeah.
Do you think that's, of course, Secretary Besant and others will deny there will be any revaluation, but it seems to me that that's a card that they have, and they've even spoken about it. I think, yeah, back in August, Colin Weiss, he wrote a paper for the Federal Reserve Board talking about revaluation. Why would they be writing about it if they weren't thinking about it? And yes, I don't know if you saw last week, I think it was on Sunday, or Besson said, well, the US economy is going to grow significantly and do really well in the first and second quarter. And my question was, how does he know this? What does he know that we don't? Just wonder what you think of this prospect of revaluation
I
of
think it's
gold.
highly probable. I do. I think it's highly probable. I screamed since the beginning of the year that it wasn't tariffs that was bringing all this gold back. Um, it's reshoring. Central banks are no longer just buying gold; they're actively hoarding it, and it started then. And it's interesting, there's a fine line between conspiracy and reality, and I'll give you an example. But before I do, you got guys like James Rickards saying, yeah, they're going to revalue it to 24,000, and he has a metric by which he does it. I think it's M2 divided into the gold or whatnot, which would give the Treasury General Account 5 trillion plus free and clear um, by issuing new gold certificates. And by the way, those gold certificates, the gold does not belong to the Federal Reserve, who prints 5 trillion and gives it to the Treasury. They get the cash value of it. The gold belongs to the people. But by printing that money, every $4,000 increase in the price of gold would give the Treasury General Account 1 trillion free and clear. By printing that, you devalue the dollar by 40-50%. What did Trump talk about yesterday? We've done 18 trillion in manufacturing, brought it home to build manufacturing centers and this and that. What does he want to do? He wants to bring home manufacturing. Now, here's the fine line between conspiracy and reality right here. The raising of the gold price is actually devaluing of the dollar. That's what they want to do to sell manufacturing to the world. You'd have to relinquish the world reserve currency. What did knucklehead Jared Bernstein say? He is a moron. He was the chief economic advisor for Biden, but watch him try to explain treasury creation. It's the most humiliating thing you've ever seen someone do. I know you remember that. His report, Dethrone King Dollar, speaks of losing the reserve status. Triffin's dilemma, no longer good for the U.S. We can't ever not have a trade imbalance being the world reserve. Vice President Vance said the same thing on White House letterhead, right? They don't want it. They want a devalued dollar to bring back manufacturing because we don't make anything anymore. 60% of this country has, I'm going to get to the conspiracy fine line, but 60% of the country has a literacy rate below that of the 6th grade. For God's sakes, we're broke, we're stupid, we're insolvent, and AI is going to kneecap how many jobs? At least the majority of entry-level jobs. And so when you talk about the need to bring back manufacturing, and by the way, that doesn't take out of the equation that manufacturing having robotics and AI in it. Regardless, we need it, right? We need it because people are going to be in big trouble in this country, period, in terms of employment and in terms of the country being at a compromised position, a very risky one, to be reliant on the world for all of the things we need, from pharmaceuticals to airline components to military. We need to manufacture stuff, period, right? We have to. So that would require a few things. One, reshoring gold, and they called it tariffs. I said, bullshit, it's tariffs. It is not tariffs. They're reshoring. Wake up. It's a ruse. Number two, they would need to shed the reserve status. Well, Bernstein said so. Vance said so. You can see that it's no longer in their best interest. And what are all the countries of the BRICS trading? Local currencies over a bridge network or the SIP system, cross interbank payment system, something like that. What that's not controlled or compatible with SWIFT, right? Settling imbalances in what? Oh yeah, gold. We'll settle imbalances in gold, and that's the Shanghai Metals Exchange building all these multi-jurisdictional vaults. First one in Hong Kong, metal that leaves China has to go through Hong Kong. Oh, yeah. So Saudi Arabia can sell their oil to China for digital yuan, which is now immediately convertible into gold without going back into dollars. Do it through the Shanghai vault. You got the gold. Where's the second vault being built? Oh, that's right, Saudi Arabia, right now. And then throughout the whole Belt Road, gold is going to be the settlement system for that side. Let's go back over here. All right. So you want to bring back manufacturing. So you get rid of the world reserve status by, in essence, devaluing the dollar and more or less telling the world through our fiscal irresponsibility, you're an idiot to hold our dollars. But that's really what we don't want. We don't want to be the reserve currency because we want to bring back manufacturing. Trump talked about it all day yesterday in his speech. And so you do that, you reshore the gold, which Judy says you peg to the back end of the bond market, which we've talked about. But that line between conspiracy and reality in terms of where does gold go. Here's one place. You talk about the Genius Act, right? And the Genius Act is diabolically genius in the respect that anytime money moves, once this is fully implemented, it has to be done so by stablecoin. The stablecoin is then backed by U.S. Treasuries according to the legislation, right? So look at USA Tether, who will probably be the primary benefactor of all of this. USA Tether, their new CEO is none other than Bo Hines. Bo Hines was Trump's crypto czar through August. Wink, wink, nod, nod. Here's what you're going to do, Bo. When you take and move, anytime money moves from a pack of chewing gum, a pack of cigarettes, a new car, or a new house, it doesn't matter. It's moving a la stablecoin. Bang, settled just like that. No more checks, no more wires. Boom, settle. All right, it's backed by stablecoins. Those stablecoins are backed by treasuries. The interest on those treasuries is not transferable. So Tether keeps the money, the interest. What are they buying? 12 or 13 billion in gold already and Bitcoin. I think they want to let Bitcoin go higher and continue to rug pull it to pay down the debt. I think they want, and devalue the dollar, by the way, but I think they're continuing to buy gold. And as much as they're going to be buying not only as many treasuries and as much gold as countries do. And all of that gold accumulation devalues the dollar. Now, did they work out a deal to sell it to the treasury? Maybe. He was his crypto czar. He was his advisor. Now he's a CEO. He made the rules that he's now benefiting from. Okay, fine. You're going to make lots of money, Bo, but here's what's going to happen. You're going to sell that gold to the U.S. government when we come calling. Until then, you take the interest that is not transferable to the holder of the stablecoin. All of that money, you keep buying gold. Where were they just a few months ago, Tether? At the Beaver Creek Mining Summit, talking to the actual miners. They're buying miners and they're buying a shitload of gold. And they will continue to do so anytime money moves. Not only will it be synthetic demand for the treasury, keeping rates low, it'll be synthetic demand for the gold market, letting the price rise. And then at some magic moment, maybe it's July 4th, 2026, I don't know, when Judy said he will back the back end of the bond market to gold. We've talked about this before. Maybe they do revalue it to a much, much higher level. They let it rise organically, a la synthetically of the stablecoin moving until you get to that point. But what I'm getting at is that all of this would, and if she's right, and they do peg it to the back end of the bond market, you can bring back manufacturing at zero upfront borrowing costs. Build the new high-tech manufacturing centers at zero upfront borrowing costs and redeemable in gold. So at some point, and her book said 5, 10, 20, 30, not just 50 year, the redeemability is in gold. There is no interest. And the more stupid we are with fiscal and monetary policy, the higher the price of the gold goes. But you bring back manufacturing and no upfront borrowing costs, and you have a massively devalued dollar to sell your product to the world at. Could it happen? Yeah, I think it could. And when you see Bo Hines as the CEO of USA Tether, it really makes it seem like, could it just be a coincidence? Like everything else that we see all the time? No, it's not. I think it's part of the plan. And when he keeps harping on manufacturing, and your own vice president writes about it on White House letterhead, that Triffin's dilemma is such that we cannot be the reserve currency anymore. And the last knucklehead, Bernstein, said the same thing years ago. We're getting to the point where the realization is countries will trade their own currencies and find a way to settle imbalances in something universal like gold. That, I believe, is a very long-winded answer to your question. But yes, ultimately, I think gold will go higher than anybody thinks possible. And I'll leave you with one last thought about this. The people who are bringing this gold back in the billions and billions that we know of, because we just heard that only 1 out of 3 transactions is being reported, right? Most of the gold that central banks are buying isn't being reported. It's bought through a proxy bank, or it's not 995 fine, or it's just brought in some other way. Because it's voluntary. It's not mandatory that they report it. These people don't do things just for shits and giggles. They do it because they understand the monetary system is evolving and gold is being put back into it. It's going to back the treasury here, and it's going to be a settlement system over there, if I had to guess. I'd love your opinion on that, Mario, because you understand bonds as well as anyone. Do you think I'm onto something, or am I on something? That would be the question I'd like you to answer.
Yeah, I hadn't heard of this guy. Is it Bo or Bob Hines?
Bo Hines. He
Bo
is the
Hines, yeah.
CEO of USA Tether, which is already Genius Act compliant. It is the dollar-based stable coin,
Well,
and he's now the CEO.
well, I mean, I guess what your conspiracy theory is that he's acting as a proxy for the U.S. Treasury, by
Absolutely. Yes.
so that
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 is my conspiracy theory.
I that's highly possible because
And is it any more crazy to think that you could add to that conspiracy theory Stephen Mirren, the architect of the
oh yeah,
Mar-a-Lago
him
Accord,
as
just
well.
happened to slip into the Federal Reserve?
Yeah, him as well. He wants a devalued dollar as well, and he
There
talked
you
about
go.
yeah,
Follow the dots, connect the dots, and you're like, huh,
yeah,
yeah. Oh, that makes sense. And that's the thing. That's what I try and do is follow the dots.
yeah.
You put those two guys together, they were both his advisors. And now one's in the Federal Reserve and one is the CEO of USA Tether. That's an interesting connection.
And the other thing about bonds that you asked me and gold, let's say, is I don't know if you've read the diary of Benjamin Roth during the Great Depression, and
I have not.
he was a lawyer back then, but he wrote about what was going on with the dollar, with the economy, and everything else. And it's interesting to read it because the way these people talk back almost 100 years ago, uh, they used to talk of the gold price rising as the dollar being devalued. So I think that's what's happening because if you look at the price of, let's say, the U.S. 10-year Treasury in terms of gold, the price of gold is going up massively as well. So yeah, the when you let gold rise versus the dollar, that is a devaluation, and that will only help the government because and people who have gold because that will
Well,
make also the
yes,
U.S. paper debt a lot cheaper. And unfortunately, Andy, I think this gold bull market is being started by the central bankers and governments and the public, with the exception of hopefully the people that follow us, they're going to be at the tail end and they're going to be left holding the bag unless they start. There's still time to get involved, I think. And maybe you could talk a little bit about that, how Miles Franklin could help some of the viewers that haven't pulled the trigger.
absolutely. And real quick, when Roosevelt confiscated gold and paid everyone $20.67 for their $20 gold coin because he was being benevolent, you get 67 cents extra. A dozen eggs were a nickel. That's a lot of money, right? But then he immediately devalued the dollar by 40%, making gold $35. The whole object of putting gold higher is to devalue the dollar. As far as people working with us, Mario, the best way to get our price list is, or questions that you heard here or anywhere else, or questions for me or IRAs or any of that stuff is info at milesfranklin.com. Now, I know you have a lot of viewers in the UK and in Europe. I think you were just recognized when you were in the airport. I think in Zurich. I'm not sure. I heard you talking about that. The guy brought you a present even. See, I do listen to you. And but we're only able to help those in North America, US and Canada. But if you request the price list, that's all you want, great. We'll send it to you. If you have questions, let us know. If you want to be contacted, let us know. We do update the price list twice a week. We can't always continue to update it. We want to keep it close to the vest for a myriad of reasons that you and I can discuss another time. But if you find prices that are better, which are usually you won't, let us know. We'll do our best to make it equitable. We're pretty good about that. Info at milesfranklin.com. Please let us know that you heard about us on Mario's YouTube. It's very important. And we've done this now, it'll be 36 years in February. We've done almost 14 billion in sales, Mario, and we've never had a customer complaint, a material one, ever. And that's something we're very proud of. That's what makes us different in an industry that is federally non-regulated. I should say what makes us different is we are licensed and bonded in the state of Minnesota. I live in Florida. Well, I moved here 5 years ago, but my corporate entity is still back in Minneapolis, which is the only state in the United States that mandates licensing and bonding. And we are, and we're background checked. We're held to a higher standard. Most companies in America will not do business in Minnesota because they too would need to be licensed, bonded, and background checked every single year. And the state of Minnesota will sue you otherwise. It's the only state in the United States that mandates this. So we are held to a higher standard, and we're very proud of our reputation. The state of Minnesota doesn't care about our reputation. They just want to make sure we're licensed, bonded, and background checked every year. And we are. So that's who we are. That's what we do. That's our reputation. That's our track record. And if people want any questions answered or our price list, info, info at milesfranklin.com. And I can't tell you how honored I am, not only that you're my friend, which you are, you've slept in my house and played golf with me, but that we work together, because I think your information is as sound and solid as anyone out there. And it's just an honor to call you a friend and to work with you, Mario.
Same here, Andy, and I'll have to think about coming over, especially if it stays this cold.
Just get in the car and head to the airport. Come
Yeah.
on. They're waiting for you. There's a flight to Florida already. I know it's gassed up and ready to go.
All right. Andy, thank you for coming on the channel. I really enjoyed speaking
Let's
with
do it
you.
again soon.
Yeah.
Now, I would normally say, is there anything like Thanksgiving in the UK that we got next week, which is my favorite holiday in the world?
No, we don't celebrate Thanksgiving, but
Nothing like it.
they do Black Friday though.
Yeah, well,
On
of
sale.
course, every girl's favorite day. Well, I will wish you happy holidays. If I don't speak with you, I know I'll reach out to you and wish you a happy New Year and Merry Christmas. But happy, healthy to you and your family and everyone else out there. Those in the U.S., happy Thanksgiving, happy holidays, happy New Year, and look forward to picking up where we left off, hopefully on the first tee box, Mario. But until then, you stay well, and be looking forward to catching up.
Thank you.